Hi, I'm Randy Kirk, and there's been a lot of obvious conversation this week about the cost of Tesla stock, and the stock just continues to go down. It's down again this morning as I'm recording this. And what's going to happen in the future? Is it going to go even below $100 a share? You know, what is going to happen in the coming months? I am not a stock analyst, although I've been watching the stock market for my entire adult life and even before I was an adult. And I certainly have made some mistakes over the years, and a few times I've done very, very well. So I'm going to attack this as if I know something, and you may choose to differ with me. But where we're sitting right now is a kind of a debate raging on Twitter between what's more important, unit sales or profit. Elon came out last week in a Twitter Spaces, and he said, look, I'm all about, for 2023, I want to sell every car I can make. And if I have to give up profits to do that, I will. He said he would even go negative in terms of corporate profits in order to sell every car he could make. And he says, as long as it doesn't interfere with the long-term success of the company, I'd even be willing to lose money in 2023 in order to sell every car we can make. So that's quite a statement. And I would agree with him. I think given Tesla's capabilities, I think selling out next year would be more important than making 30% margins or any margins at all. Having said that, I have been talking for a week now. You can see all these other videos I've done. And there's more videos coming on this subject. I don't think there's any reason to give up margins. I certainly don't think there's any reason to give up margins in the United States, because the IRA is going to help so much in terms of both the cost side and also reducing the sticker price. So I don't see the reason to reduce margins at all in the US. So there's probably almost 1 million vehicles out of the 2.4 to 2.65 that I think will be sold next year. So that's quite a bit of the total sales next year that don't have to suffer any reduction in margins, in my opinion. Now, what we're going to talk about today is, what does that mean in terms of the market, in terms of how the competition, et cetera, et cetera. So let's just start with a couple of things. We have to realize that only electric cars get the $7,500 IRA deduction, and only electric cars get the advantage of the cost reduction from the making battery cells and putting cells into packs. These two reductions are massive. They amount to potentially $15,000 a car at sticker, $7,500 each, $7,500, maybe $6,000, but maybe more, maybe $66,000, $7,000 at 30% margins. So you could almost get to 50. You could easily, let's say, get to $15,000 off the sticker in 2023 just because of the IRA, and still maintain 30% margins, or close to it. So the car that is competing right now with a Tesla that is at in the 40s and 50s, that's not going to be the car that, Tesla will be blowing the socks off of those cars, and it'll now be competing with the Corollas and the 25 to 35,000 range cars, where there's no comparison. It's not even a comparison. So that would be a beginning point in this argument. I've predicted in various places that Tesla will make 2.65 million cars next year, but we'll assume that we just need to get to 2.4. The catalyst that most people are going to be looking for is going to be profits, and or some people will be looking for production. My thesis is there'll be several events in the first quarter that will provide all of the information that anybody needs to know to see that Tesla can do 2.4 to 2.65 million cars at full margins. All right, so let's finish this thesis. All right, when these catalysts occur, the world will wake up, and once they see that these numbers are possible, this should have a fairly dramatic impact on the stock. So the first time that we're going to have this is just coming up on the 2nd. January 2nd, we should get the number of cars that were built in the fourth quarter of 2022. Once you take, now let's say people are predicting everywhere from 125 to 425 to 440,000. Some people are predicting even more than 440,000 for the fourth quarter. Whichever number you pick in that range, if you think it's 427, you think it's 440, you think it's 460, whatever number you pick, if you now annualize that, or you just use it to figure out what are the profits going to be in the fourth quarter, you're going to come up with at least $1.50. The street's expectation is $1.24. That's a pretty substantial increase over the street's expectation. Now, though, you take the $1.50 and and it could be higher than that. It could be $1.75. Now you annualize it, assuming that Tesla does not increase their sales at all, but they just maintain their margins. You annualize that, and you're going to get up to $6 a share just for cars. You've already seen my video. Maybe if you haven't, you need to go see the video about energy. And my claim is that on the energy side, you're going to see another $3 a share from the new plant in Lathrop. So $3 a share right there in terms of profits. And then you've got the rest of the IRA benefit, which comes partially out of the Lathrop energy storage, partly out of the wall units, and partly out of the cars. Altogether, I'm saying that's another $3 a share. So now you've got 6, 3, and 3. You've got at least $12 in profits next year. That doesn't count any of the other parts of the equation. So if people start to see that this is possible, when will they see it? When will the catalyst happen? Well, that would be at the earnings call. I think the earnings call here, I've got it down here, will be on the 25th. Will be the earnings call. And people are going to want to know. They're going to want to know about Lathrop. I mean, believe me, that's been so much of the talk is about Lathrop. Okay, is Lathrop fully ramped? When will it be fully ramped? What are the actual margins? What impact does the IRA have on Lathrop? All these questions are going to be asked and answered. And as they're asked and answered, I think we'll begin to see that this $3 per share for 2023 is possible. The other thing that might be answered at that earnings call would be, are we going to expand Lathrop, and/or are we going to build another facility somewhere else like Lathrop? How many of those might be coming? Maybe those questions will be answered, maybe they won't, but that at the earnings call would be, I think, where a lot of this is going to take place. This could be a massive catalyst when the street finally has facts in front of them to figure out what's going to happen with Lathrop. The other thing that's going to happen at the earnings call is the IRA. We're not going to have everything we need to know about the IRA by the earnings call, but I think we'll have 90% of the government will have explained part of it. Some of it will be obvious and will have been put into use. And then we'll be able to ask at the earnings call exactly what is the impact? What is the annual impact that Tesla's expecting from the IRA in general? And I think that'll be another $3 a share. So the earnings call is where a lot of this is going to take place. So the total for 2023, I'm saying 12,000. I'm actually saying 15 because I'm saying that the company is going to make way more cars than what's expected. So the current street is saying 2.1 million. Some are saying as low as 1.9 million. The run rate for the factories will be at 2 million sometime in January. So I don't think that's possible. I don't think it's possible to be under 2 million next year unless Elon just completely reverses field and says, no, I'm not going to make as many cars as I can next year. So we're looking at 2 million if we never ramped Austin, we never ramped Berlin, we don't make any more cars in Shanghai, we make no more cars in Fremont. And just this morning, there was a report saying that Fremont is anticipating ramping maybe to as many as 700,000 cars next year instead of, say, 500 last year or 600 that most of us have been modeling. So there's a lot of potential for the number to get much higher than 2.1, which is the street's estimate. To the extent that the number gets much higher than 2.1, to 2.4, 2.5, 2.6. Now you can be talking about possibly $15 a share. And if the street can see clear and convincing evidence of 2.4 million cars at full margins, plus the IRA, plus energy, I think the stock has to move. Well, that's my analysis. I hope this has been helpful. Please like if you liked it. Please subscribe, of course, if you'd like to see more content like this. It's been great talking to you.